More African nations are on the fringe of defaulting on their debts this year. Angola and Gabon top this list, and a not so surprising addition is Nigeria. Meanwhile, the number of fiscal adjustments is on the agenda for Kenyans, in line with the efforts to get new facility from the International Monetary Fund. Those and other sides are what we'll be touching base with this morning. This is Business Edge. I am Lekon Onobanjo. Let's start with the African business headlines. On African business headlines, Egypt's Prime Minister Mustafa Madbouli said that the industrial partnership between Egypt, the United Arab Emirates and Jordan aims to boost the private sector in the three countries. This came during a meeting with the Egyptian Minister of Trade and Industry, Nevin Gameir, on Sunday. The industrial partnership aims to foster regional economic integration, capitalize on competitive advantages, develop regional supply chains, and improve trade prospects. The European Union is seeking additional gas supplies from Nigeria as the bloc prepares for potential Russian supply cuts. Matthew Baldwin, Deputy Director General of the European Commission's Energy Department, said this over the weekend. Baldwin made the comment in Nigeria, where he held meetings with officials from Africa's largest oil producer. And now the EU imports 14% of its total LNG supplies from Nigeria, and there is potential to more than double this, Baldwin told Reuters by phone. Meanwhile, the Ikike field in Nigeria has started producing oil, according to the French oil and energy company Total Energies, which expects it to reach its peak output of 50,000 barrels of oil equivalent per day by the end of the year 2022. The European Union is seeking extra gas supplies from Nigeria as the bloc gets ready for potential Russian supply cuts. And now the Capital Markets Authority has frozen the transfer of Unilever's majority stake in Limuru Tea and blocked a US-based private equity firm from buying minority investors in the listed company, disrupting the 596.7 billion shillings, that's about $5.1 billion global deal. The regulator has declined to approve an offer from private equity firm CVC Capital Partners seeking full buyout of Limuru Tea minority owners, including tycoon Joe Wanjui, in the wake of shareholder fights at the firm. Now, the CMA reckons that it is premature and a breach of the PE firm to seek the remaining 48% stake. And those are the African business headlines this morning. We go on a quick break now. When we return, we'll get into our first topic for today, which has to do with debt distress amidst looming threats of a global recession. Do stay with us. We'll be back. Angolan and Gabonese sovereign bonds are trading at distressed levels, raising the number of emerging market nations at risk of a default to a record. Each of Angola's $6 denominated government bonds and 3 from Gabon are trading at more than 1,000 basis points above U.S. Treasuries, a threshold that signals a nation may struggle to repay its debt. This is according to data compiled by Bloomberg. The sovereign bonds of Nigeria, Kenya, and Egypt fell into distressed territory recently. And joining me from Lagos, Nigeria, is Abiodun Kayode Ali, economist and tax manager with PwC Nigeria. Good morning to you, Abiodun. Thanks for joining us on the show.
Good morning, Lekon. Thank you for having me.
Beautiful. Now, each of Angola's $6 denominated bonds and 3 from Gabon are trading at more than 1,000 basis points above U.S. Treasuries. And this actually indicates that that country or these countries may struggle to pay their debt. So people are asking, why is this so?
Okay, yeah. So if you look at it generally, a lot of countries, especially countries in Africa, are going through such issues. And historically, prior to the COVID-19 pandemic, we've seen a situation whereby most of these African nations actually raised these bonds, issued these bonds, and they issued it at favorable rates at that point in time. But given the impact of the pandemic as well as the current conflict in Europe, what has happened is that it has led to advanced economies trying to protect themselves by raising their own rates. And in raising their own rates, what we've seen is that investors are now moving over to these advanced economies. And the impact is that it's actually strengthening the dollar and it's actually causing the currencies of most of these developing and emerging markets to depreciate. And that's exactly the case of Angola and also Gabon, right? So currently, these nations as well, they're actually in need of support. And the implication of this particular trading of their bonds above the 1,000 basis points simply means that they're going to struggle to access the market, right? We understand that there is actually an inverse relationship between the price of the bond that is being issued and the yields. A lot of investors, like I said earlier, considering that they are selling off these sovereign bonds, what it simply means is that for them to be attracted to these emerging markets, they need to get a higher yield. And that's exactly what we're seeing in the case of these nations. So yes, it is worrying, but all the same, there is still hope for Angola, especially because both these two countries that we've discussed, they are oil producing nations. And oil is the major export for these nations, especially for Angola. It represents about 95% of its exports. And if you look at the current price of oil, you can see that there is actually prospect for Angola, which has an external revenue of about $14 billion right now. So that's the current situation of things, and we just hope that with time, most of these external shocks would actually tone down, so these nations can get back on their feet.
Well, just like advanced countries are doing, Angola is also putting in measures and also coming up with reforms to deal with the external shocks, as you have mentioned. And one of those things is a program that they just finished with the International Monetary Fund and even the liberalization of its currency called Kwanza. But then would you actually say that that program has failed, or would you say it is laudable in dealing with the situation?
So I think it's a laudable program and project that is currently having with the IMF right now. If you look at the Kwanzaa actually has even done very well, and this is coming at the backdrop of the price of oil, which is currently trading somewhere above $100 per barrel. The Kwanzaa for a year has actually gained. Its year-to-date appreciation is somewhere within the range of 24 to 28%. So these programs that Angola especially is actually having with the IMF, it's actually bringing out about the needed improvements in its economic situation. So from my own perspective, I think it's actually a good one. I think what is now important is that they stay committed to it, because most of the time what we discovered is that most of these African nations which take on these programs with the IMF, they tend to renege on some of the agreements that they've actually entered into, and Ghana is a good case study. So what I expect is that it's actually a good program, and I think it's something that will help Angola out of its current distress.
Now, Abiodun, according to a recent report by Moody's, maturities on international bonds issued in the previous decade will peak in 2024 and remain elevated in the next decade. That's according to reports. Then don't you think that this increase sort of would put financial pressure on African sovereigns if they are not able to roll over their debt? Or do you think they would be able over time to grow the capacity to roll it over?
Okay, that's a very interesting question. To be quite honest, the issues that are being faced by emerging markets, most of the developing countries in Africa, it's quite huge, right? Like you rightly said, most of these debt instruments that were issued, they will be maturing within this decade and also the next decade. Now, most of them, to be quite honest with you, given the report that was released by Bloomberg stating about 25 nations are in a state of, they have a high debt vulnerability state. So it's expected that a lot of these nations actually are in a need of a restructuring plan. Zambia met with the IMF about 2 weeks ago, and talks are still ongoing. But one thing that is actually quite worrisome is that at this point in time, there is a pool of creditors that most of these developing nations have actually sought loans from, right? So it's not just the Paris Club, it's not just the World Bank or the IMF, which are multilateral creditors that we used to have in the past. Now they've sought loans from even the Chinese government. They've sought loans from the New Development Bank. They've sought loans from India and from Turkey, right? So and also from private bondholders. So there's a lot of creditors right now. Definitely, they will need some restructuring, a lot of them, especially those who are having issues. If you consider most of the external goods or commodities that are being traded, most of them are actually primary products, which are not actually doing quite well in the international market, probably with the exception of those who are trading in oil, right? So probably those ones can be doing better. But for most of developing nations in Africa, most of them are actually going to struggle. So there will be a need for the debt restructuring. But the question now is, will the creditors, right, will all these creditors that I had mentioned earlier, will they all accede to the debt restructuring program? There's been a delay in that of Zambia, in that of Chad and Ethiopia, but we just have to wait and see how it goes in the coming weeks and months.
Well, some people have actually described the creditors as hawks feasting on their prey. We don't know if that's the situation the way you see it. But then on the list of countries that might likely default in the coming year, or maybe even this year, is Ghana. Now, do you think that would be the case for it? Do you think it will be able to bring about a turnaround? How would you describe its economy and its ability not to default?
All right, thanks. Thanks for that question, Lekon. So Ghana's situation is actually it actually went from bad to worse, especially if you look at the current state of things in recent times. Ghana was actually enjoying an IMF extended credit facility, right? And this was between 2015 to 2018. It was extended in 2019, but definitely, given the current state of things, the fiscal deficit of Ghana being quite high, even higher than the IMF benchmark, Ghana is actually in the need of help at this moment. And that's why, even though it's tried to run away from the IMF, receiving an IMF loan, it still had to go back, right? So Ghana currently, like you rightly said, it's ranked high in terms of debt vulnerability, the risk status, and the risk of defaulting. I believe Ghana can turn things around. If you look at some of the indicators by the IMF, I think it's just in a few of them that Ghana is not doing quite well. But for others, Ghana is actually doing okay. So I think when you even look at it, when you look at its import cover, it has an import cover of about 8 months, right? And IMF requires you to have about 3 months import cover. So in that aspect, Ghana is actually doing quite well. And also when you look at its external, if you look at the ratio of its exports, if you look at the ratio of its debt to external reserves, debt to exports, Ghana is actually doing fairly okay. But yet, all the same, for it to receive this loan, it needs to actually go for this IMF program, and it needs to make an adjustment to its fiscal management, right? The fiscal management has actually been quite worrisome, and this is the primary reason why most investors actually decided to drop Ghana's sovereign bonds. But right now, having introduced the e-levy, investors were kind of quite pleased, and we saw an improvement in this. But yet, it still seems like Ghana is not doing quite well with its fiscal management policies, and that's the exact reason why the IMF has gone to the IMF for help. I hope and I believe that with assistance from the IMF and with fiscal discipline, Ghana should be able to turn this story around.
Well, in the mix, we have Egypt, Kenya, Namibia, Senegal, Rwanda, South Africa, even Nigeria, of countries that might go into default. But then, Abiodun, we'll go on a break. And when we return, you mentioned a couple of things that can be done, but then we want to dwell further on what sort of adjustments that are needed or that they need to pull through if they hope to get out of the economic doldrums. So just stay with us, and I'll be back with you in a bit. Now, Angola is not looking good. Same as Gabon, now Nigeria and Ghana, amongst other African countries in terms of debt payment. The widening of the distress club to include oil-producing countries even shows our few nations are being spared the concern of a global recession risk. Now, this is said to be a continuous struggle that they need to deal with because, of course, we have rising inflation on the fringes. So let's quickly go on a break, and when we return, we'll look at what African countries can do and what can be done in terms of looking inward to draw out of the resources if they will be able to find that reprieve that will help them get out of that economic situation that it is faced with. We'll be back in a bit. Do stay with us. The number of countries in distressed territory has risen to 21 from 9 at the end of last year after Russia's invasion of Ukraine, which spooked investors and triggered outflows from emerging markets. Now, a growing number of African countries are also joining that list, and that is a growing concern for the governments and economies. So, could there be some reprieve or respite? And that is why we will continue to engage Abiodun Kayode Ali, who is an economist and tax manager at PwC Nigeria, on the show this morning to see if there's something that can be done. Thank you so much, Abiodun, for staying with us. Now, let's move on. Now, a list of countries likely to default on their debts this year include Tunisia, Egypt, Kenya, Namibia, Angola, Senegal, Rwanda. You talk about Morocco, Ethiopia, South Africa, even Nigeria. And with the recent release of Q1 figures, this is said to be an indication of a concern that is said to be engulfing the world about the risks of global recession and acceleration in terms of inflation. So are these concerns that we need to be worried about? And are there ways whereby we can, if not put an end to it, but then stem the tide or curb the situation?
Thank you so much, Lincoln, for that question. So truly, it's something to be concerned about, and you're going to see a lot of these nations almost tending towards the same path that Sri Lanka actually found itself in, right? So when it comes to how they got into this, we've discussed that early. Some of these things were externally induced, right? Things that were outside their control, but yet all the same, there are some internally induced actions that actually led there are some internally induced circumstances that actually led to this, right? So what is expected for most of these countries is that, first of all, they need to ensure that they put in place fiscal discipline, right? Some of these developing nations, they got loans, and the question was, were they using it for the actual projects that they got it for? So that fiscal discipline is something that is quite necessary. Then also trying to block leakages in terms of corruption, right? This is something that has been found that is kind of frequent in most of these developing nations, being able to plug all those loopholes, right? Then in addition to this, I think one thing that is quite important is that in taking out these loans, there should be transparency in these nations, right? So transparency is such that we have both the public account administrators and we have the government there, both of them looking into things, even the legislation, looking into most of these agreements that are signed by these creditors. Yeah, it's worrying that China happens to be a big creditor for most of the developing nations in Africa. Now, it's ironic that most of these nations actually signed these agreements with the Chinese government without fully understanding the clauses in these contracts, right? And we understand that China most of the time puts this non-disclosure clause, right? So it's quite important that most of these nations actually review the clauses of these contracts next time when they are going into such borrowings. But what can they do at this point in time? One key thing is that they need to look inwards right now. So when you talk about looking inwards, you need to look at what are your goods, what are your commodities that you can export, for which you have that comparative advantage. It's important they take advantage of that, and it's also important that they deal with food security, because most of these African nations, they're actually reliant on imports when it comes to food, right? And that has been the bane of countries such as Egypt, for instance, that imports most of its wheat from Ukraine, right? So what can they do? They need to try to begin to look for substitutes, right? They need to develop agricultural practices that can suit their climate such that they can get substitutes instead of relying on imports, right? So at this point in time, a lot needs to be done on local substitution, import substitution rather. So apart from all these things that I've said, in terms of being transparent when you go into such contracts with creditors, in terms of fiscal discipline, when you have to go through your fiscal management space, when you have to try and discipline the way you spend, and also in terms of looking inwards. These are three things that I think that are very important for most of these developing nations that they need to do. In addition to that, I think quite urgently, for those who are currently going through projects that they cannot continue to manage, there needs to be a kind of arrangement of the fiscal plan. And that's exactly what the IMF is trying to do for Ghana, for instance, in the sense that the IMF is trying to cut down on some of the public spending, right? and only focus on those that are going to benefit the vulnerable. So I think a lot of these countries need to do this. And for those who have actually done an assessment of their current fiscal space, they need to run to the IMF as soon as possible for assistance. I think these are some of the things that these nations need to do right now.
Well, no doubt that some African countries have their peculiarities and their different economic stages. And you've mentioned a couple of solutions that you think, if they bring on board, will help them not go into default in terms of debt payment. But then, considering these countries, these African countries that I mentioned, are there some that you feel, with the right assistance, with the right reforms, with the right measures, they will be able to avoid defaults? And are there some that you feel are beyond rescue?
Okay, so I think Angola, for instance, Angola it stands a good chance of getting out of its current state because, like I said earlier, about over 90% of Angola's exports is oil, and oil is currently doing well, right? So I think Angola it stands a very good chance. Gabon also is also one of the largest oil producers, albeit its reserves are actually declining. It has actually gotten some support from the IMF. Some of the facilities it applied for last year has been released. So I think Gabon should do fairly okay, even Ghana as well, right? In terms of nations that I think would struggle, they most likely will be nations that are actually suffering the impact of high commodity prices, right? That are actually importers, net importers of energy and also food, right? So Zambia, for instance, has actually defaulted, right? Has defaulted in its own loan. And we have a few other countries, Chad, Ethiopia, right? Those nations have actually struggled. I believe like I said, Angola and South Africa and some of these other nations that run quickly to the IMF, I believe they do stand a good chance. In terms of those that will most likely fall, well, that's a bit difficult to say right now. That's a bit difficult to say. I guess we just have to wait and see how these things transpire over time.
Yeah, that's true. Odun, you talked about earlier, you talked about the fact that some foreign creditors have issues with being explicit in terms of the terms and conditions of the loans that they are making available to these African countries. And according to the World Bank, between 2015 and 2020, the public external debt stock of sub-Saharan African countries increased by 67.5% to about $454 billion. So why is that increase in debt so steep?
Okay, yes. So the increase, if you look at it historically, most African nations, right, especially those that have come out of the colonial era, most African nations actually needed to borrow. Most African nations had to invest heavily in infrastructure, and this was the reason for most of the debts they actually issued in the past. But unfortunately, most of them did not. There was a lot of public mismanagement, right? Most of them did not invest in those needed infrastructures. So these were some of the things that led to the increase in debts over time, right? But even with some debt forgiveness and some debt pardon, right, some of them still went back to the IMF for more assistance. When you now look at the impact of the COVID-19 pandemic, right, which had to put most of these nations in a state of distress to the point whereby even G20 nations had to introduce what is referred to as the debt service suspension initiative, right, in 2020. But the question is, even that DSSI, the debt service suspension initiative, it's not like even the G20 nations actually accelerated that initiative. They didn't accelerate the process, right? So most of these nations were still in a state of distress. And that's exactly the same thing that is still going on. Now in 2022, we've seen an issue of the Russia-Ukraine war. So these are things that have aggravated the current state of things for most of these nations who are actually net importers, right? So that's the main reason. That's the major reason.
And not necessarily and not necessarily because of the shrouded secrecy surrounding the terms by which they get to engage or agree to these terms, to these loans being given by the foreign creditors. Is that what you're saying?
Yes, that is also part of it. If you remember, I think last year, the late president of Tanzania, John Magufuli, was actually complaining about some of the debts that were actually some of the loans that were taken from the Chinese government, where he made a statement that only a drunk person would actually have taken such loans. So these are also some of the things that have led to this increase in the debt status, the debt profile of most of these nations, right? Because most of these nations actually also went to get loans from creditors, and these creditors we're talking about creditors who are more like development banks, but gave out rates at commercial, which gave out interest, which expected interest at commercial rates, right? So these are also things that led to the increased debts. And from my own point of view, I think it's quite important that no matter how in a hurry most of these nations are to get these loans, they need to look carefully, right? Get their lawyers, look carefully into these contracts, and that's where transparency and good governance comes in.
So basically, it's all about the African countries dotting their I's and, of course, crossing their T's before they
Definitely.
put pen to paper and agree to those sort of loans so that they don't further get into debts that they cannot pay back. Thank you so much, Biodun Kaida Ali, for joining us on Business Edge.
Thank you for having me, Leko.
All right, now 3 nations, namely Russia, Sri Lanka, and Belarus, have already defaulted this year, and even Ukraine is seeking to delay payments on foreign debt. So the situation is not peculiar to only Africa, as it were. However, with more African nations' dollar bonds signaling heightened default risk, it is only wise for Africa to embark on rigorous economic reforms, tap into its vast resources, and seek viable investments that can help it skim off the default threshold, just as our guest has said this morning. But I tell you that the conversation will continue on Business Edge. We will go on a break, and when we return, it will be time for international business news. Do stay with us.